Hi there, I'm Tyler Ballhorn, and this is the Stockscores Market Minutes for August 23rd, 2013. This week's topic is chasing the dream. You know, stocks that are in upward trends are easy to identify because they've got rising bottoms on the chart. And these rising bottoms are a sign that investors are optimistic. Now, we can define a trend line by drawing a line across the rising bottoms, and if that line is sloping upwards from left to right, we have an upward trend. When investors get too optimistic, however, price will run up and away from the trend line, and this creates a dangerous time to buy. Because when price is running away from the trend line, investors are emotional. They're buying the stock more because of a fear of missing out than because the fundamentals are that much better. And we find that price usually comes back to the trend line. Here's a chart of Starbucks going back into 2008, and you can see that this stock has been in a solid upward trend since 2009. What's important to notice, however, is that in the middle of 2012, price really got overextended to the upside, ran away from the upward trend line, but ultimately corrected back to that trend line before resuming its upward trend. Now, Starbucks is in a similar situation right now where the buyers have chased the stock higher and it has now run up and away from its trend line again, and that sets up for a likely pullback to the upward trend line. Somewhere in the $60 range is where we would expect Starbucks to pull back to. So when you see stocks like this, don't question necessarily that their fundamentals are bad and that they deserve to have a pullback because the fundamentals aren't solid. It's really a question of people just paying too much for the business. And that is because investors have grown just too optimistic about the company. All right, here's a chart of the S&P 500, and you can see that the S&P has run away from its longer-term upward trend line as well, and is started a little bit of a correction back to it, although at this point it's only correcting back to the shorter term upward trend line, which began late in 2012, early in 2013. Now this week we managed to close above the open for the week, and that's a sign that maybe the sellers are getting a bit tired and maybe we will resume the upward trend soon, but I still think that it's a tough one to call. We could see a little bit more of a pullback to that first upward trend line and possibly all the way back to the longer term upward trend line, which on the SPY is at around 155 right now. So I remain bullish in the big picture because the chart is sloping upward from left to right, and let's keep it simple, that is a bullish market. However, we have extended to the upside a little bit high. You know, next week wouldn't be unreasonable to see a rally in the market as it bounces back from some selling pressure of the last couple of weeks. But going into September and October, I won't be surprised if we get more of a pullback. Now, the TSX has been building an optimistic pattern for the last few months. In fact, over a year it's been building this pattern, but certainly been lagging the stronger US stock market. Now, the TSX is starting to test resistance on the XIU at 1850, 1860, and to break through that red line would be a positive. It's going to be motivated by an improvement in the global economy, which would create demand for commodities again. And we're starting to see signs of that. When we go and look at other markets, we start to see globally that things are improving. Here's the 20-year Treasury bond, which has been on a pretty steep slide in the last little while. It had a little bit of a bounce back next week, and I wouldn't be surprised to see a short-term bounce back in Treasuries, which would cause a lower yield, but I think that we have to keep a somewhat pessimistic picture about bond prices going down, which means yields are going up, and that, of course, is a bit of a negative if you're looking to mortgage a home or something like that. Now here's one of those markets that is starting to improve, the China market. The ETF is FXI, and it broke its downward trend line 2 weeks ago and was suffering some selling pressure early this last week, but it actually came back quite nicely and has maintained that short-term upward trend, which I've drawn in green. So I do think things are starting to improve in China, but still lots of work to do. US dollar has suffered pretty sharply over the last 8 weeks, but it is now at some support where I expect the US dollar will bounce. And of course, if there is some expectation that there will be tapering of the US federal stimulus in the United States, then we could see the US dollar rally back, and that could be a little bit harmful in the short term for commodities. Now, gold has had a pretty good run over the last 8 weeks, opposite the weakness in the US dollar, which was what we would expect. But it is still in a downward trend. It's really just bouncing back from oversold conditions. Still has some more upside until we get to that red line there. And so I think that gold could be strong for another few weeks, but I would be a little bit cautious because the market is still pessimistic longer term on gold. Oil is consolidating. It has broken its downward trend line. It's building a rising bottom. If it can break through that short red line that I've drawn in the chart at around 25.50 on the oil ETF, then we could see a resumption of strength. But for now, I would be neutral on this market. So US stocks, I'm bullish, big picture bullish. I think shorter term, it's a little bit difficult to call given that we're going into the weak months of the year, September and October. Canadian stocks neutral, but optimism is building. Neutral on gold, neutral on oil. US stocks may resume their upward trend as the pullback seems to be tiring. Canadian stocks are building optimism under resistance but need a catalyst for a bullish trend. That could be strength improving in the global economy, which increases the demand for commodities, which of course is good for the Canadian stock market. Gold continues to bounce back, and oil is resting right now, but both could be hurt in the short term by a bounce back in the US dollar. Well, that has been the Stockscores Market Minutes for August 23rd, 2013. Have a great week in the market and trade well.